It's your guy Boris Yeltsin, and welcome back to the Realty Boris podcast. Today I have a guest of mine here, Kevin, a seasoned commercial real estate expert. Today we'll be discussing commercial real estate, explained in simple terms. But then again, Kevin, just introduce yourself before we move forward.
Hi everyone, my name is Kelvin. I've been in the real estate industry for over 8 years. Thank you for allowing me to be here.
You're welcome. And today's podcast is shot at a 4-bedroom all-en-suite plus SQ property in Langata. It's a duplex. We also have triplexes. This is in the market for only 35.9 million. On this podcast, you'll get to understand commercial real estate, get to also capture trends in commercial real estate, hotspots on real estate, challenges that you might experience when you're purchasing real estate, and many more. So keep it locked till the end. So Kevin, you are seasoned and you understand commercial real estate, and I've been in touch with you for quite some time. Yeah. And I know that's your forte. You guys are doing a lot of commercial spaces in the market, and I think that's the strength of the company you're working with. Just like our viewers to understand commercial real estate in simple terms. What is commercial real estate?
So in the simplest of terms, commercial real estate is real estate that you make money out of, but you can't live in. Maybe
all right.
Yeah, that's maybe offices, warehouses, even land sometimes. Yeah.
And you guys have been building for how long? I mean,
our organization started building warehouses back in 2012. So then we were building one project, selling it off, register another, selling it off. But now we've gotten into a space where we are doing massive industrial parks.
But then how is it? Because, I've seen developers, like where we're based, developers are doing a lot of residential real estate, but I haven't seen developers moving into this side of commercial real estate. Then why commercial real estate as opposed to residential?
So we noticed from our investors that they wanted consistent returns.
All right.
That's one of the advantages of owning a commercial property.
All right.
Chances are if you get a tenant, they sign a 5-year, 3 months minimum contract. So you are able to plan your income for the next 5 years. Another advantage is commercial properties, you can use it more of like a tax shield. Roughly, I think 10% of the value of a property. For instance, if I sell you a warehouse for 20 million, 2 million annually, you can use it to offset your tax every year.
Can you explain that in detail? You say 10% of what?
So 10% of the purchase price. 10% of the purchase price.
Let's say 20 million.
20 million, 2 million. Every year, you're able to offset it from your tax.
Wow.
Yeah, I think that one, if a tax accountant would be better to enter into more details, but you are able to offset it. And commercial properties you buy plus VAT, so if it's 20 million, there's a VAT on top of it. But again, if you're a business person, you use the VAT as an input for your business.
But then let me ask you, it's different when you're buying residential property, because with the residential, you have stamp duty. So you say commercial real estate doesn't have stamp duty implication?
It has stamp duty.
All right.
And it has VAT.
Wow.
Yes.
That's so expensive then.
Yes, but that's why we encourage people who come to buy commercial properties to purchase using companies and companies they trade with, so that they are able to enjoy now the tax incentives from that.
But I don't understand the idea of having VAT on property prices. I mean, it's too high.
Again, it's a business. When you go to rent a warehouse, even the tenant pays you rent plus VAT.
Oh yes, true. We pay plus VAT. Yes, it's true.
Yes. So for commercial, you always have to top up the VAT.
All right. So look, we are in this podcast here, and I think you are well informed. You know more when it comes to commercial real estate space.
Yeah.
You've been in this industry. What do you think are the trends that are quite common when it comes to commercial real estate as at now?
So I'll talk from where I see it.
All right.
From what I've seen our organization and similar organizations doing, we've been trying to open up at the river as the next industrial zone. We've done there more than 500 warehouses.
Wow.
And Plus, now a lot of other developers have come in at the river.
All right.
And we've just converted that place as an industrial zone. Not too far from the EPZ. Again, you know, there is an EPZ in at the river.
All right.
One of the advantages we saw with at the river is if, say, you have your factory there, you're importing your raw material, you get to bring it next to the city, process, then what you push to the city is a finished product. So, yeah. We also saw that Adi River has better, or rather it's quicker to get permits there than in
as compared to Nairobi?
Yes.
Okay.
Yes. But if you go on the other side, what has...
Sorry to cut it short. What permits are those? I mean, what permits?
So if you're starting a business, there are the general permits that you have to get from the county, county business. There, I think Mavoko County really...
Quick?
Yes.
Okay.
They're very quick on that.
All right.
Yeah.
So that's why we went
to the river. Again, proximity to things like railway, Mombasa Road, that really helps.
All right.
Yeah. We've seen a very big, huge success. We are able even to lease our warehouses faster than we are able to sell. That means...
Why is that?
When an investor comes, you buy, you enjoy the rent.
All right.
Yeah, because there's a really big uptake of warehousing from small SMEs in the market.
All right.
Yeah, that is on the warehousing space. For offices, we thought of it a bit different. If you noticed, everybody has been doing grade A offices in Westlands, Upper Hill side. We thought of a different direction, going to Mombasa Road. Why we went to Mombasa Road is we realized there are a lot of logistic organizations along that road that need that caliber of offices, international grade offices, but there is no enough supply. And the bet has paid off. We've been able to lease, for instance, our building 85% less than 7 months.
Your property is still new. I mean, it's barely how many months?
We launched in June, July, August, September.
85% gone.
85% gone.
All right.
Yeah.
So it shows there's a demand for grade A offices in that stretch.
There is a demand for grade A, and it also shows that sometimes get off the norm.
All right.
Don't always follow the grain. Try and do something different. Guys were asking, why are you doing offices on Mombasa Road? I mean, it's an industrial.
In all honesty, you know, when you guys were beginning the project on Mombasa Road, you sent me the project. I was like, come on, I don't think this will work.
Yeah.
You know, because grade A mostly you'll find them in Westlands and Upper Hill.
Yeah.
And I was like, why should you do a grade A office off Mombasa Road? I mean, it's one of the places I never thought that a grade A office would exist. And I think you guys are doing so well when it comes to grade A offices.
So we looked at it from this aspect. Mombasa Road has proximity to the airport, ICDL, industrial area. Most of these companies around there need an outlet, need their own offices. From where our office is to the ramp going to JKI, it's 50 meters.
All right.
So it's very easy to access.
All right.
That is on the office space. Now, another space that I've seen in commercial doing very well is these small malls.
Strip malls.
Street malls.
Yes.
They are doing very well.
Yes.
We have not gotten into that
Why
space.
is that? Strip malls do so. I've seen many young investors doing it.
Yeah.
I have friends of mine who are young investors who come together. Then they lease a plot for maybe say 20 years. They do a small mall. It's gone very fast, and they make their money out of it.
So that has become actually, I think it's the hottest thing in the market right now.
But why is that?
This is because you are able to provide to the neighborhood
all right.
the amenities that you expect from the bigger malls, but you can't have all these big malls in the neighborhoods.
All right.
Yeah. So with the strip malls, I'm able to find that you're able to provide spaces to smaller SMEs with a good anchor.
Yes. With a good anchor.
If you get a good anchor, say the likes of Naivas, Quickmart, Carrefour, with those guys, you're sure your mall will ever be always busy.
Occupied. Yeah. So you think strip malls is something that is doing so well?
It's doing
but
so
I've
well.
seen that mostly in areas like Lavington. I've seen in Kilimani, some in Kileleshwa. It's a big thing in that neighborhood. I think also the strip malls would offer a lot of convenience. Why should you drive all the way to a mall somewhere?
Yeah.
Yet you can have all the things you want in a strip mall. And you mentioned about the anchor tenants, like the Naivas and the rest. So I think it's a very good idea.
You want to purchase everything, but you don't want to drive. You can walk from your house to the strip mall.
All right.
Get everything, you're back home.
But then look, I've also seen this thing, developers building residential and mixing with commercial spaces like shops. You find we have dry cleaners, blah blah, on the ground floor level. I think that's also a trend in
Yes.
commercial real estate.
Yes.
Yeah, but then again, they say it's done because of convenience to the tenant.
Yeah.
My only concern is, I kind of feel like there is convenience, yes, but also the tenant who stays there is inconvenience too.
True.
I don't know if you agree with me on
I
that.
agree with you there. I always see that it's my private space, but it's open to the public.
Yes.
So my downstairs space, it's open to the public, but my private space, which is my home, it's private. So every time I go downstairs, you're meeting all sorts of people.
Yes.
So I agree with you there. But it's a trend that works. We have a lot of people who love that kind of convenience.
Okay.
So they are willing to overlook
right.
something like that.
I've seen a property in Westlands where they've done a very nice residential property, but then on top, they chose to leave it for a restaurant. And the restaurant does so well. It's mixed. It's commercial plus residential. And it does so well. But my concern is if I was to live in that space, I won't be really impressed, getting into a lift. You have somebody who doesn't live in that space, walking in, moving out. Then again, safety and security is a concern when it comes to that kind of a concept.
Correct me if I'm wrong. Most times you'll find that people who are doing something like that, they are using the units for short stay. Yeah,
it's true.
Yeah, so you end up having short stay units. Then you can have the restaurant. Me as a tenant or me as a resident in this particular building, I don't want to be somewhere where we are sharing lifts with strangers every day.
All right.
Going to the club.
All
you
right.
want privacy.
At
home, you need privacy.
Okay.
But we find that, like for instance, the office building we've done on Mombasa Road, we try to cater for every person, like you said. In Westlands, there's someone doing a restaurant at the top. Here we are doing restaurants at the top also. Showrooms take the lower level. Then you have the offices in between.
All right.
So you're able to do pure commercial real estate,
spaces,
but provide to different businesses.
Clientele.
Yes, clientele. And that really does well.
Look, I know you're really exposed and you understand the commercial real estate landscape. I would also want to understand this. There's this thing called REITs. I don't know if you know it.
Real Estate Investment Trust.
Yeah. How does it work? And you're in the commercial space.
REITs, it's not really caught on in Kenya very big,
Okay.
but there are different forms of REITs.
Okay.
There's what we call an investment rate.
All right.
And then there's a development rate.
Okay.
So in simpler terms, what a rate is sort of buying shares in.
A property,
in a property. So an investment rate means you're investing in, let's say, a income generating property. So whatever income is generated,
you get a share of it.
Yes, you get a part of it.
Okay.
For a development rate, you will do use the money to build, sell, and then you get a part of it.
All
so
right.
That's the major. But you have some organizations here locally who mix the two. So you find that they take a D rate, build, then the investment rate buys off the D rate, and then they continue. Case and point the Kwetus.
All right.
Those guys do that a lot. Yeah.
Okay.
And it has a lot of what can I say? Bottlenecks, getting the permits from CMA and all that.
It's
but
regulated.
I find that it would be a very good way of getting money to develop most of these
But then
projects.
again, I think it also gives room for investors who want to come in with small monies.
Yes.
Because I know for the rest, they do big commercial real estate, which of course you can't manage to pull with around, say, 5 or 10 million.
Yeah.
So I think it gives room for these other investors who want to come in with, say, 5, 10, 2 million.
Yeah.
You buy a stake, you get a return out of it.
Yeah.
And I think...
And then it's also very easy to liquidate with a rate. So tomorrow I want my money back. It's easy to liquidate. It's like shares. I sell off and I get my money back. Yeah.
I get you. Look, somebody is watching and is wondering, I want to start my commercial real estate journey. Which are the hotspots right now that you think anybody who wants to start can easily get into?
So I'll tell you this. From where I sit, the organization I work with, we have residentials, we have offices, we have warehousing. But anytime someone comes and says, I'm looking for a product to invest in, I always take them to warehousing.
But why?
Reason being, this is a personal reason, I always see warehousing having very steady tenants. Look at it this way. If you come to set up, now you being the tenant, you come to set up in my warehouse, you've imported crazy expensive machinery from China, you've imported expertise to come install it for you. Are you ever moving out anytime soon?
Nope.
Your clients get to see you there today, tomorrow, next year, but when you've built your base there, you're not moving out.
All right.
So me as your landlord, I know that it's your base of operation. It's either you continue paying me rent or a few years down the line, you buy me out. So it's still a win-win. So say you buy a warehouse, say for 20 million, you earn rent of around 150 monthly. Then after 10 years, that company has established and it wants to buy you. Of course, you won't sell at 20.
All right.
Your money has appreciated.
Yes.
You might sell it maybe at 30. So you have the 10 on top.
Yes.
And the rent you are earning.
Exactly.
Yeah. And given that you're renting majorly to businesses, rent is another expense that they make sure they take care of, just like you take care of your salaries. So you don't joke with that.
All right.
I always compare with residentials this way. A tenant, I can get you a house that has a ready tenant, but the tenant decides to give you notice 3 months down the line.
It's true. There's nothing you can do.
But with commercial properties, we sign long-term leases. Breaking them, it's normally very, very difficult.
Okay.
Yeah.
Maybe if there is any economic situation that is happening in the market, then, you can always terminate.
Yes, you can always have a mutual agreement, but without the mutual agreement, it's very difficult to terminate.
But then let me ask you, don't you think Grade A offices in Westlands are still a hotspot?
Yes, they are.
All right.
Westlands, you've seen, has a lot of international organizations there. Most of these organizations want Grade A. Grade A means you have the perfect ratio of parking, yeah? You have the perfect ratio of lifts in the building. You have things like a full backup generator. Modern things like, what do you call it? Automatic faucets in the bathrooms. That means you have water savings.
All right.
You have censored corridor lights.
All right.
So it means you're
conserving energy.
You're conserving energy. So most of these organizations, they want to live in a building that follows the ESG. That is it's called something to do with sorry, I've forgotten. ESG is something to do with sustainability.
All right.
So most of these organizations want to go with that.
All right.
When you're building a Grade A, it's very easy to go with EDGE, like our building is Grade A and also EDGE certified. We have Grade A that.
What do you mean EDGE certified?
EDGE certified means you're doing, you're building sustainable buildings.
All right.
For us, sustainable meant the sort of materials we used to build. It meant the savings we brought in with electrical. We have, our entire roof has solar.
All right.
That means the power used for common area really reduces the amount of power we get from KPLC. Then we have all our faucets are automated. So anytime it senses your hands or you're near it, that's when you get some water. Otherwise, it shuts off. So all these small measures mean that your power consumption, your water consumption, really
it's conserved.
Yes.
But then look, there is this thing about Upper Hill when it comes to commercial buildings. Do you think it's still a good place to invest in terms of commercial real estate?
I would say yes. And but I'm of the opinion that try and go to places that people have not gone to.
All right.
You see, one of the things I've seen with Upper Hill is cost of land is very high.
All right.
Now, if you build something similar to what we've built in Upper Hill, and then you build the same on Mombasa Road, who will get a better return? Your
Explain
cost of
that.
land
is quite
is very high.
Of course, Mombasa Road.
No, in Upper Hill, your cost of land is
high.
way higher.
Yeah.
So I'm expected to have. But now, most of the people going to Upper Hill, I would say, they are used to Upper Hill being a Grade A office center.
Yes.
But they have not tried to look at
the ROI.
not only the ROI, what businesses are looking at.
All right.
If I'm a business person, I want to be near where either my customers are or case and point for logistics, where these logistic points are. That's why. But I would say still Upper Hill is really doing well.
All right.
It's really doing well.
All right.
But I've seen a new trend. You've seen things like malls coming up in Upper Hill, which we never saw.
Yeah.
There's a new mall
coming up
on Gom Road. They've just opened it.
Yeah.
I think that's amazing because if people always look at people at home, but this one is, if I'm in the office, I need something to grab maybe in the lunchtime.
Yes.
Easily run
you can
there.
Walk into
you can
the
walk
mall.
there and get something and go home. Before I head home, I can easily get there as I wait for traffic to reduce. Shop.
Then you drive home.
Yeah.
But then look, you talked about strip malls initially, and I think strip malls also a trend that is, doing so well in the market.
Yeah.
And I've seen, young investors coming in and doing it so well. But then again, is there a future in the strip mall investment platform?
Yes. I think we've just started. A lot of these neighborhoods don't have a proper shopping mall sort of setup. And by doing strip malls, it's bringing it closer to these neighborhoods. Of course, right now it's being done a lot in Kileleshwa, Kilimani, Lavington. But you've seen a strip mall all the way even in Naivasha. And it's working.
True. I've seen them. Yeah.
It's working. So I feel like it's a new trend that has started, and we are yet to see.
You know what I'm thinking? I kind of feel like in the areas like Lavington, Kilimani, Kileleshwa, they are not well organized. Sometimes I kind of feel like it's overdone. You find one is here, another one, and it's just all over the place. And then, look, I'm just trying to be honest.
Yeah.
These strip malls that we are doing, they cause a lot of traffic. If you look at like Arvin's Kodek, crazy traffic, because guys want to get to the mall, someone to move to another direction. Yeah. There's a lot of commotion. Of course, it's a good idea, and it promises good ROI.
Yeah.
But then I'm also thinking it's also important for us to understand planning. We need to organize ourselves, and not just to come up with the strip malls everywhere, because it's easy to build them. Yeah. I think so. It's a good investment platform for commercial real estate. But now the problem is
planning.
It's inconveniencing others as well.
I think one of the things with these upmarket areas is the people who are building these strip malls, they are not providing enough parking.
Oh, yeah.
Because if you look at it, for instance, the strip mall on Mandera Road.
Yeah, I know it.
That one, you
amazing.
Rarely find traffic.
Parking is
they have very good
well organized.
Parking. So if you're doing in upmarket, you're expecting, chances are, every person who is coming, or 90% of people coming, they have a car.
Yeah.
So have you provided them? Otherwise, they'll have to wait for somebody to leave for me to park.
All right.
It spills over to the main road.
All right.
We've caused traffic.
So you think parking is the main issue here?
Yeah.
Now look, you've talked about the glory and all these beautiful things about commercial real estate. But then again, where there is good about something, we also have the bad side of it. Or maybe say where there is ease, we also have the hard part of it. Somebody wants to come in. What do you think are the challenges that someone might experience when it comes to owning, purchasing, or even disposing commercial real estate? Because you've been in this industry for quite some time.
I would say a lot of people don't understand the commercial real estate very well. So they tend to always invest in residential. So you find that if I've bought a commercial and it's the time to dispose it, the market is smaller. And the people who want to purchase, who know commercial, you'll find they buy 1, 2, 20 units at a go. So selling one unit is
not an issue.
It's not an issue.
All right.
Right? On the other side, I see is for SMEs. If you're an SME and you're setting up, you're new in the market, I'm forcing you to sign a 5-year, 3-month contract. You don't know whether your business is going to peak or not.
Yes,
so
very true.
That one brings in a bit of doubt to a lot of these businesses.
All right.
Yeah.
So for me, what I'm thinking with the commercial real estate space, because I've had buyers who would also want to invest in commercial, but the problem is I kind of feel like the price. I mean, the entry value is quite high. It's only the rates where you can join real estate with, like 5 or 10 or something. But then again, when it comes to just buying commercial spaces, it's something else. It's pricey, in all honesty. I also kind of feel like it's quite difficult to dispose. I don't know, you might have a different opinion, maybe you can explain that, but I kind of feel like it's quite of a problem to dispose of commercial spaces compared to residential. Reason is demand dynamics.
From what I've seen with commercial, again, I'll talk about warehousing because that's where my forte is. Most times the people who buy you off are your tenants. As the business grows, they buy you off. Now they have the muscle to purchase.
Okay.
Now, purchasing it might be expensive, 20 to 26 million thereabouts.
Yes.
But with 10 million, you go to a bank, you're able to get financing, and here you're able to show them a cash flow. Kelvin has given me a tenant who's signed a 5-year lease.
All right.
So for the next 5 years, I'm expecting
cash coming in.
Income.
All right.
So if the rent starts at 150, there's a 5 to 7.5% annual increment to cater for things like inflation. So show that to your bank. Show me a bank that won't jump on it.
I get you, but then Kevin, look at this. Another concern is you have 20 million, right? You've got two options, either to buy commercial space or residential. In all honesty, you know that residential promises a higher ROI. I don't know if I'm right or wrong.
I would say I would go, if I have a business, I would always go for commercial.
But why?
As I mentioned,
you're losing money.
No. You're only looking at the ROI aspect only.
All right.
There is the tax, as I mentioned, there is the tax element, right? You are able to plan long term. With commercial tenants, you are able to have a tenant for, and then you're able to build a relationship long term with your tenants.
All right.
Residential, I always see, as much as somebody will come and say, I'll sign a 5-year contract.
It's volatile. You can't
2 months down the line, they'll give you a notice and you can't do anything.
Yeah.
So, and then once somebody leaves, you might stay there with your house for 3-4 months. You still have to pay service charge.
I know. Yeah, you have to. But then look, you are. I think you are biased. But then again, it's okay because you're a commercial guy. Let me tell you something. There is commercial real estate and there's residential. Let's talk about maintenance cost. Be honest, because you know residential as well as commercial spaces.
What is a warehouse, for instance? It's just a box. What are you maintaining a lot?
All right.
Maybe the washrooms, the office. Cost of maintaining a warehouse is very minimal. Okay. It's a very basic building.
All right.
Same thing to an office, where your people are.
Yes.
Maintaining it, majorly it's taken care of by your tenant, the person using.
All right.
But for residential, you know. Tenants are always on your neck.
All right.
Yeah.
All right.
My water has issues, they're on your neck.
Yeah, I know.
But for commercial, small things, they're able to take care of it.
You see, you talk about the glory where you have a tenant who's going to be with you 5 years. Now, look, a tenant leaves. With commercial real estate, it's quite of a problem to get a tenant. Of course, they promise long-term tenancy, but then acquiring a tenant is a problem.
I'll tell you, right now, I'm having a problem. We are not able to build warehousing.
Come on.
I'm not building warehouses faster than
the demand.
The demand. Not selling. Selling is a different aspect.
Tenancy now.
Tenancy. I'm getting calls from our partners left, right, and center.
All right.
Do you have this? Do you have this?
All right.
And the nearest warehousing I have will come online in December next year. All the stock we have is fully let.
All right.
Yeah.
All right. That's really impressive. But then again, look, I have 10 million and I want to invest just right now and I want to get into commercial real estate investment. How do I go about this?
Two aspects. You can either go the REALTY way.
The other way is?
Or the other way is talk to your financier, see how you can use the 10 million as a deposit to purchase this.
But do you have guys who have done it before?
Yes.
But I think banks are not really, positive when it comes to financing commercial spaces compared to residential.
They are there.
What do you mean?
Financing. It's just that you never ask.
Sure.
Ask the bankers.
Because I see
and the bankers that we work with, they always give you that as an option. Yes.
Wow, I didn't know that. It's quite interesting.
They're always ready to finance.
All right. So, Kevin, we're wrapping this up. If you were to term this commercial real estate landscape using one word, what would you say about the commercial real estate landscape right now in Nairobi, Kenya? Just one word. Is it promising? Is it, I don't know, just one word.
I would say it's a bit consistent.
Oh, okay.
Yeah, because me as an investor, if I put my money there, I'm able to do long-term projections with that. So there's a bit of peace with commercial. If you understand it well, there's peace.
Wow.
Yeah.
So that was Kevin, real estate expert when it comes to commercial spaces. We managed to go through all these segments quickly. And I'll say thank you for gracing, this podcast.
Thank you for
having me. It's been
having
very, very fruitful. I've learned a couple of things. I'm not a commercial guy. I am into real estate, that is residential real estate. But I think in future I'll try to move into commercial spaces. But then I think I've learned a lot that I didn't know about commercial spaces. It's a guy, Boris Yeltsin. They call me the Wolf of Real Estate. This is our fourth Realty Boris podcast when it comes to real estate, discussions and podcasting and blah, blah, blah. But then today we got a chance to do this podcast in a 4-bedroom plus SQ property in Langata. It's on sale from 35.9 million. We also have a different design. We have another option, which is a 4-bedroom, of course, but bigger than this. It's going for 44.9 million. It's the market. It's a community of 85 units.
89
units in the compound. Comes with anything that you might need in a gated community: swimming pool, clubhouse, gym, steam, blah, 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 all in this compound. We are not so far away from the Wilson Airport. In case you are interested, the link is on the description down below. The number is always on your screen, and the website is www.realtyboris.com. I'll see you on the next episode at Realty Boris Podcast. Ciao.